Here's the brutal truth nobody in the trading world wants to admit, and once you hear it, you can't unhear it. I spent the first 2 years of my trading journey completely lost. Not because I lacked information, actually, the opposite. I had too much of it. Books, YouTube videos, paid courses, indicators, stacked on indicators, and yet, my account kept bleeding. I started with $6,000, zero finance background, no mentor, no insider knowledge, just me, a screen, and a lot of wrong assumptions. 16 years later, I'm sitting on an 8-figure portfolio. And the shift that changed everything? It had nothing to do with finding a better strategy. It had everything to do with how I thought about trading. I've worked with thousands of traders, complete beginners, intermediate guys, people stuck in the same spot for years, and the pattern never changes. They've consumed massive amounts of content. They know terminology, they know setups, they know theory. But the moment real money is on the line, they fall apart. I spoke to someone once who had been studying markets for 5 straight years, watched everything, read everything, and he looked me dead in the eye and said, "I understand all of it, but I still can't make money." Trading is not a knowledge game, it's a decision-making game. And those two things require completely different skills. You can understand a concept perfectly in theory and completely crumble when real pressure shows up. Section 1. You're learning in the wrong sequence. This is where most people silently sabotage themselves before they even take a single trade. They tell themselves, "I'll start trading once I fully understand everything." Sounds responsible, right? It's actually the slowest path to growth. Because trading isn't a subject you master from a textbook. It's a skill you develop through repetition and real-time pattern recognition. So here's what actually works. Simplify aggressively. Instead of watching 15 different tickers and studying 20 different setups, pick 1 or 2 instruments and go deep. Watch how QQQ behaves when it approaches a prior high. Does it push through? Does it stall? Does it reverse hard? Watch how it reacts during major news events. Watch the rhythm of it. Every morning do this one thing. Mark yesterday's high, mark yesterday's low, mark the pre-market range. Then just observe when price touches those levels. What happens? Does it bounce? Does it break? And retest? Does it chop? That single daily habit will teach you more than any paid course ever will. Section 2. Paper trading is a comfortable lie. Most traders spend months, sometimes over a year, paper trading. They build confidence in a consequence-free environment. Then they go live, and everything collapses. The entries that felt easy now feel terrifying. The exits they planned get abandoned. The stop losses they set get moved. And they can't understand why. The emotional weight of real money changes your brain chemistry in the moment. Hesitation, fear, greed. These aren't personality flaws. They're neurological responses. The solution isn't to go big. The solution is to go real, but small. Trade with an amount that's real enough to create emotional stakes, but small enough that you can still breathe, still think, still follow your plan. A simple test: if losing one trade would make you second-guess your next 5 decisions, your position size is already too large. Early on, forget profits. Seriously, your only objective is building consistent behavior, consistent entries, consistent exits, consistent risk management. That consistency is what compounds. Section 3. Overtrading is slowly killing your progress. There's a very seductive lie in trading that more activity equals more learning. So people sit in front of their screens all day, taking trade after trade, thinking they're grinding their way to improvement. Here's what that cycle looks like from the inside. You wake up. You feel pressure to produce results that day. So you start looking for trades that aren't really there. You enter late because you chase a move. You exit early because you're anxious. You revenge trade after a loss. And then you do the exact same thing the next morning. Before every single trade, ask yourself one question. Is this trade planned, or am I reacting to something? If the honest answer is reaction, you don't take it. Full stop. Limit yourself to 1 to 3 trades per day maximum. Some days, the right number of trades is 0. That restraint, that discipline to sit on your hands, that's a skill. And cash is always a valid position. Section 4. Risk management is your actual edge. Everything else we've talked about falls apart if you don't have this foundation locked in. Because here's the reality, every honest trader will tell you you are going to be wrong. Consistently, most beginners enter trades hoping they're right. No defined stop, no defined max loss, just hope. And when the trade moves against them, they freeze. Before you enter any trade, you define your stop. You define exactly how much money you're willing to lose on that trade. Then you size your position based on that number, not the other way around. And once you're in, the stop doesn't move. You don't negotiate with it when the market pushes against you. You execute what you planned. That's where real consistency lives. Section 5. Depth over diversity every single time. This is the trap that keeps traders searching forever. A new indicator comes out, they try it. A new strategy gets hyped, they switch to it. Someone posts a winning trade using a different setup, they add it to their arsenal. For me, everything I trade comes down to levels, price action, and market context. 3 things. I'm not jumping between Fibonacci tools, Elliott wave theory, VWAP strategies, and momentum signals all in the same week. I've applied the same framework across different markets, across different economic environments, through bull runs and crashes, for years. And that depth, that's where real confidence is born. Not from knowing 50 strategies at a surface level, but from knowing one framework so well that you can read the market like a language. When you stop searching and start deepening, everything changes. Section 6. Your routine is either building you or breaking you. Pre-market. The routine is simple. Check futures direction. Scan for significant news. Mark your key levels for the session and build a conditional plan around them. During market hours, you wait. You don't chase. You don't force. You execute only when your pre-marked levels align with what price is actually doing in real time. And after the close, this is the part most people skip. You review everything. Every trade, winning or losing, gets examined. What was the entry? What was the reasoning? Did you follow your plan? You journal it. You look for patterns in the market and patterns in your own behavior. On a weekly basis, you step back further, review win and loss rates. Look at where you're leaking money. Adjust. That post-session review process is where actual growth happens not during the trade, but after it. This is the real picture of how traders actually develop lasting skill. It's not through chasing the next hot strategy. It's not through spending 12 hours a day staring at charts. It's through simplifying your focus, trading with real stakes, managing risk without compromise, sticking to one framework long enough to master it, and building a daily routine that reinforces every one of those habits. Is it the explosive overnight success story that gets clicks? No. But it's the path that actually works. Time passes regardless of what you choose. The only question is, are you genuinely improving or just staying busy? In the next video, I'm going to show you exactly how I apply all of this in real time. How I read the market each morning, how I mark my levels, and how I structure my trading day from open to close. That's where it all comes together.